Let's get to it, guys. It's Saturday. It's time to hang out, kick back, review how we did for the week, how I did for the week anyway. Take a look at some of the plays that I took, why I took them, what I'm looking at coming into the week ahead, and if we have a little bit of time at the end, I might do a little bit of gaming, but we'll do this for an hour, see what we come up with. Hopefully that will be all bueno. So let's pop this up. Here's most of the stuff that we were looking at on the week. So let's take a look and just go down the list on here. I just want to make sure that there were two. So this week it was the typical stuff, guys. We know that this was Cancer Month. That's what I've been working towards. That's what I've been moving towards. Is taking plays and positions in bio, specifically leading up to the ESMO, which is today, and the ASCO, which is the upcoming weekend. So that's what we're looking at here, guys. Is the stocks from that. I'm gonna need some tunes here if we're gonna do this though. So let's pop up some music. Interesting. I wonder why that's not no audio there. Oh, sometimes I tell you, maybe we don't. Well, I can hear the music. I guess that's what's important. You guys can't seem to hear the music, so that's unfortunate. But let's just get down to it anyway and see what we get on this, shall we? So if you guys can't hear the music though, I'm gonna put on tunes that I can hear that you can't. I suppose that's one advantage to OBS glitching is I can actually listen to tunes that otherwise would be copyright. So yay! All right, let's go to MBRX, guys. MBRX is the long play that we've got into a potential COVID, as well as their drugs do a whole bunch of stuff. But COVID is the play on this. It is still halted, guys. So if we pull up the chart, you'll see it's done a whole lot of nothing because we are still waiting on the SEC halt to be lifted. So has not been traded since May 1st. We're now coming towards the end of May. There's been no news on progress with MBRX. One of the companies that was tied to the MBRX halt, however, was released. So WPD is trading again actively, but I think it's CSNS or CNS and MBRX remain halted. So we're waiting on that to pop up or for them to release it. Now, I'm not overly concerned. People have been privately acquiring larger positions in MBRX during this halt. The medical studies on it are solid. They're peer reviews. Just because the SEC has halted the stock doesn't mean that it has to stop all of its business, right? Yes, they're providing information to the SEC, but they're still moving forward with the daily running of their business. So they are still developing. We are getting private studies out that are corroborating the data on MBRX and their WP 1122 for COVID applications. So it's still looking pretty good as far as that goes. So that one's looking pretty good. ATRX is a long-term play for me. This is the one that's come out with the Subia, which is looking like it's going to be a replacement not only in the DoD but across the American medical industry for morphine in many cases, pain treatment, surgeries, that kind of stuff. So right now we are seeing it priced at around $1.52. Let's go to month to date. So here's the week. It started open on this was $1.39. Closed at the end of the week was $1.52. So not bad, decent increase over the week. Pretty happy with the direction this is heading in. This has a lot of room to move though, guys. If we're looking back at the 1 year, it's not so great. 3 year, I think that this is around where we're headed again. Is back up around this $6 mark. So I'm pretty happy about that. With that said, guys, this is not a stream for financial advice. These are all my opinions. I do due diligence daily, 4:30 a.m. to 7. I am a day trader. I'm not a financial advisor. Anything you hear on here is just my opinion. I don't know squat. I'm not qualified to teach you squat. If you are here, I'm just showing you the process that you can go through yourself to dive in, understand better, understand plays, understand what you're looking at. I'm not telling you how to make plays, where entries are, where exits are. That's not my job. I don't want that job. Your trades are your own. Do your due diligence. That's out of the way. Okay. So ACRX did well this week, up. MFA. I like to have a little bit outside of my portfolio. MFA doesn't currently have a dividend. I do see it having a dividend. Again, it used to have a 10% yield dividend that was pretty consistent. So I'm looking for that to continue. In Q3, Q4, I think we see the dividend come back. As for this week, open was $1.60, close was $1.66. So not bad, small gain. Again, guys, this is a long-term play Q4 for me. Actually, this is probably a lifelong hold. I'm not really looking to sell this one on growth. This is a dividend. This is going to be the start of my drip portfolio. So for me, that's what we're looking at here. If you guys don't understand what a drip portfolio is, we might be able to break that down afterwards. But this is the start of that. Hey, Levi, how's it going, buddy? Happy Saturday, or I guess is it Sunday there? It might be Sunday there. I'm not sure, but it's late. You're up late. Just breaking down the plays for the week and how the portfolio is doing, and then I might do a little bit of gaming afterwards, but we shall see what we shall see. Okay, so that's that. Let's go to GameStop. GameStop is another play I took outside of the bio industry. This is on a long. Well, happy Sunday, man. From the future. What is up, Master Cobra Fire? Okay, so hmm. With GameStop, the reason why I like GameStop is one, Michael Burry. You guys, John Ha, what's up, buddy? If you don't know who Michael Burry is, you've probably seen the movie The Big Short. He is the guy that run the Scion Fund. He was the guy that saw the housing bubble before the housing bubble knew it was a housing bubble. And so he's the guy that had that play. He has looked at GameStop. He likes their liquid cash. He likes what they're doing. He's making some suggestions. I took a deep dive into this one, I think last week on Saturday for you guys, kind of break down what my thought process was on it. I like GameStop. I like what I'm seeing. I'm liking the direction. The board is having some interesting conversations, but thanks, buddy. Always good to have Malaysia show up. Get some sleep. It's too early for you to be here. So GameStop for the week is down. Open was 440, close was 418, so it had a big drop off towards the end here. Just want to see why that may be. Let's see if there's any news on GameStop that dropped towards the end of the week. Hey, Kimmy! Tools. Let's go. Their director's messed up. I mean, I don't know that this is enough because this is not new news for anybody, right? This idea of the the activist investors slamming the directors isn't new news. Anybody that's in GameStop has known this. This has been this hedge fund that owns 7% of GameStop. We're aware of them. They've been saying this for over a year. So the market may be like, oh no, they said this. For me, this is just an opportunity to gain a growing position in GameStop at a lower price. Now, one of the things that I like about this, though, a lot of people see this as a negative. I don't. I see this as a positive. This 7% ownership, along with Michael Burry's 5%, gives them 12% of the vote. And both Michael Burry and this fund are both in agreement that the directors of this board need to have a shakeup. The things that they need to do are leverage their liquid capital, close down its excess stores, and buy back stock. All of them agree. Both parties agree on that almost exclusively. So the fantastic thing for me in this is great. This is saying that heading into the next conversation of voting, when they're voting on the board of directors compensation and who should be on the board, it looks very likely that these two members of the board that have been tying the company down for a while now are going to be gone. And I think that's really, really good news. So if that's what drove this down in the market, That's fine by me. I'm not very concerned. So my GameStop position is still profitable because I got in back here. I think this is Friday. Yeah, I got in Friday. I think I got in probably around the 4 mark. Somewhere around here. Anyway, I'm still profitable on this thing. So for me, I still like this. I think this is a long play. Again, I'm playing this probably into Q1, Q2 after the next gen consoles drop later this year. But yeah, I still like GameStop. That's not a huge concern. CNR was one we were looking at, guys, as far as a potential construction play. With new homes being built, it was something I was looking at. It did have a rise at the end of the last week. So I took a look at it. It opened 466. It closed 514. Now I did not get in on this play. I ultimately decided it wasn't for me. I didn't like it enough to actually get into it. It did go up this week. It wouldn't have been a loss, but I didn't take play. I think it's important to look at the plays that I took, regardless of whether they're wins, losses, or if I just did due diligence on them and didn't necessarily get into them. So DMPI, uh, DMPI on the week. So DMPI is one of my cancer plays heading into the ASCO next week. They are presenting at that. As you can see, I entered into this position a while back, actually. I think the 11th or the 12th I got in on this. So back here. Last or the week of the 13th through, or the, is it the 13th? Yeah, the week of the 11th through the 15th, I was kind of all over the place. 18th, it looked like it was showing a bit of an uptick, but this week it did very well. Closed up around the 92. So as you can see, from May 1st to where we are now, we had an open of 53 and it's up to 92. So this play is looking like it's panning out very nicely. ACO is next weekend, so you'll probably see me exit either Friday or the following Monday, depending on how we see this move. But I do have my exit set. I'm not going to share what that is, but this stock has performed very well for me so far. I'm very happy with this play. Next up, Marker. So Marker is another cancer play that we've got here, guys. It is. Let's go month to date. So this is another one headed into the ASCO. It does have another presentation happening. The open on this was 232 this week. The close was 275. So again, I guess 276 technically after market. So fantastic gains there. I'm happy with the movement on this. This means that I am seeing the correct movement on these plays. Now, there were two plays that I'm going to leave. I'm going to come back to RMED because RMED and VBIV were two plays that I took this week. I got to put VBIV on here. VBIV were two plays that I took this week, but not on my own strategy, on another strategy that I saw out there that may have potential. So these plays here are not my typical bio due diligence. They were played on different things. It was more of a cultural study on Robinhood and volume. So that's a different play than my typical plays. I'll break those down afterwards and how those worked out. INNMF is one that I was seeing that had the orphan drug designation as well as um, the fast track designation. So here, this stock is a penny stock, guys. Super low. Dropped down to 6 on the 21st, back up to the 10 on the 22nd. Unfortunately, I did not take a position in this on the 6th like I thought I could get into. TD does not offer the stock for trade, so I will take this off the board as it unfortunately is not a stock that I can trade. Next up, BDX. I think the BDX was actually one that I was looking at with Martini because this one is very clearly outside of my price point. So I'm not going to break this one down. This is one that I did on my stream. This was one that came up in conversation with uh, Martini. So AKTX, Akari Therapeutics, they had a fast track approval midweek. So 18th, it opened $1.86, closed at 201. So modest gains, but still decent gains. This is the other thing, guys. Like these plays, people are expecting you to make these massive gains all the time, and it's like, okay, well, I mean, let's be honest. If you could do so, what was it, $1.86? So $1.86, 201 divided by $1.86. So I mean, 8% gain on the week. That's not bad. Hi, I wanted to ask. I looked over some penny stocks, and all five that I saw were going down for years. Can you tell me why? Why is it that they're just companies that aren't successful? It could be a lot of reasons. So one, it could be it could be a lot of failure as far as what they're putting out there. Um, and then it could also just be we're waiting, and that's similar in bio. You'll see bio up at like $6-7 when it initially IPOs, and it'll slowly decline all the way down to less than $1 until bam, they hit and they get their notification of like, oh, you're approved and your drug's a go, let's go. And you'll see it all of a sudden have that meteoric rise back up to where it was, right? So that's the thought process kind of there. There's a whole bunch of different factors. Boris, if you want to throw in a few of the ones that you were looking at, I can probably do a deep dive after this because we're moving through this list pretty quickly. So if you throw them in there, I'm more than happy to just hop in and take a look at a few of them and see what we can do. Kimmy, is your portfolio mostly in biotech healthcare? Is it because you're something you're ultra familiar in? It is something I'm very familiar with now, but I wasn't necessarily. Back in January, as COVID was starting to evolve, what I realized very quickly was there were two sectors that seemed to be very resilient heading into the fear, and that was tech and that was bio. Tech, I did not have a lot of success trading. I just don't understand the movement on it very well. But with bio, I started to note that I could recognize the pattern where bio trades a lot less on financials. So their earnings aren't a huge effect, not nearly as much as the news that comes out. So being somebody who trades in social media and social chatter, bio industry operates very much on press. So that's something that I noted and was able to move into. And I've had a very high level of success in these bio stocks. So BMY was my first big win, followed by a Merck option play, and then I moved over to equity, small equity based off of FDA approvals, orphan drugs, fast tracks, PDUFAs. If you don't understand what those acronyms are, not a problem. If you trade the bio industry, you definitely understand what those are. But my portfolio is 80% leveraged into the healthcare sector. It's something that I see, regardless of whether COVID is good or bad, the healthcare sector is going to be there. So right now, I don't see a lot of COVID plays that I particularly like. So right now, I'm actually playing cancer with ASCO being at the end of the month, which is the one of the larger conferences in the U.S. for cancer. That's where my focus is what drugs are presenting, what data is coming out with that conference, and as a result, I'll trade on that. That's kind of where my head is at with bio. But like I did show back here, I do hold MFA. That's fantastic. And I love showing people the sector. Typically, people are really wary about biopharmaceutical. They're like, it's super scary. I don't know it. I don't understand it. I like to try to break it down and show people that it's not as intimidating as a beast as you think it is. You definitely need to do your research. But if you're willing to put in that time, it's definitely worth the return. But yeah, my portfolio also has a holding in MFA. There's also GME. I think I actually have some holdings in USO in another one of them. Um, AR, FO, SL, HTZ. Great. I'll come back to those boards as soon as I finish this list. iPix, Brelacidin is one of the candidates for potential candidates for COVID treatment. So this is one that I have holdings in. This is a far outside play. You guys see that this is a penny stock. So Boris, you were asking about penny stocks. This is one of those. If you go into the on a 3 year, so you see, so even let's go further back. How far back can we go here? Okay, so at one point this thing was up around $3, right? And then it's just had this slow decline, and then this is COVID. Or no, this is not COVID. This is last year. Something happened here where it just bottomed out and came back, and then we've had that slow decline into January, and then since January, there's been this uptick, and I got in somewhere around here, so that 15-16 mark. Um, but the reason why I'm in this is I'm seeing the potential of their application for COVID as an outlier play. So my hope is that this stock can get some positive COVID news and maybe do something. But this is an outlier play. Like this is a Hail Mary long bomb. Um, for sure. Um, okay. Let's go on from iPix. So AZN is AstraZeneca. They're just doing all kinds of stuff right now. They've got COVID vaccine as well as the um, COVID vaccine as well as a ton of cancer drugs coming down the pipeline. So you'll see they started the week May 18th. Open was 53.64. They hit a high of 57.44 this week, and then back down to 55.22. But even at 55.22, 55.22 divided by 53.64, still a 3% gain on the week. They're beating inflation on the week. So there's AstraZeneca. That's going to be a strong play in the next week, so that's going to stay on the board. Seal is what we looked at on Thursday morning. Um, it had a whole bunch of great news as far as approvals go, pediatric use of its drug. This is pancreatic cancer that we're looking at with this one, month to date. So we were looking at it Thursday. So even at the high $1.17, I think I actually saw it around $1.03 on the open. Now on Friday, that news finally came through on those approvals, and it went from $1.03, closed at $1.39. So a pretty nice 39-40% gain if you got out at the high. The close was $1.30, so a 30% gain on this one if you took it. I did not end up taking this play. Instead, I increased my position on the cancer plays for next week, but this is a play that performed very well. I wish I had taken it. I didn't, so that's on me. But I do have notes down that in the future, an orphan drug designation, an FDA approval, and a pediatric approval all tied into one looks like that kind of gain. So now I know that for the future. Seal did really well though. Happy on that call. Onsi is another one. So Onsi is actually presenting not only next weekend at the ESCO, but they also have the ESMO this weekend, which is a breast cancer conference. So open the week at 218, close the week at 257. So again, decent gain on that. If you got into Onsi, this is going to do very well, I think, over the weekend. It finished at 262 after market, so I think that there's huge potential for this heading into next week with another conference. Depending on the data that comes out this weekend from Onsi, that could be another big thing. IMMP, this is the one that I got into instead of Seal. This is the one that I took a position in. I think it stands to perform very well on its presentation at the ASCO. So this is the one that I'm looking at. I entered this position at the open at 106. Close it was at 107, so I'm essentially break even on this. I guess the market was 108. So for me, this play was not meant for a day play. This is meant into next week. So I'm happy with this, not gaining or losing too much. It's just in a solid kind of hold pattern. AQST, this is one we looked at earlier in the week. This had several FDA approvals. I think it had two or three. It had an FDA approval for a drug, and it had a PDUFA, which means that they're allowed to advertise for a drug. Started the week, open was 601, finished the week 575. So this one did not have a great week. Again, I did not take a position in AQST. It wasn't, well, it got the PDUFA. I didn't think that would be enough news to drive it. Now, could you have made gains on this? Absolutely. If you got in on Thursday at the open at 621, the high here was 653. There was a potential for gains, but I didn't take this play. So no gains, no losses. There was a potential win on it. If you did take it, you just have to know that. Okay, so the last two guys that we're going to take a look at here are RMed and VBIV. So the reason why I left these to last is these are not my typical biomed stocks. Okay, this is not how I would normally go about trading these. There's a streamer on Twitch, Macro Est. Let's see if I can drop him a shout out here. Let's go here. Let's go here. Let's go shout out Macro Est. Yeah, so there's Macrovest. Guy does some really interesting stuff. He's looking at numbers and data on Robinhood and how it affects the stocks that move based off of their trading volume. So yeah, that's what these plays were taken on, is volume, and it was just trying the theory. So this was a beer money play, is what I like to call it. I only put into this what I was willing to lose entirely, because it's a new strategy. For me, whenever I'm evaluating a strategy, the important part for me is not to just look at it on paper. It's if I actually see validity in the strategy, I should put skin in the game, and that teaches me very quickly to either see the value in it and I'm seeing growth, or not, and I won't consider it again because I'll remember it as a loss. So for me, until I see further data on this study, now I should, in all fairness to Macrovest, say he is still developing the theory. I got into it early to see if I understood what was going on. I either don't understand what's going on or I don't see the value in it, but it's not too surprising because it's largely a technical play, and I'm an FA trader. So I'm used to trading news and business information. This is very much a technical play, which is probably where the disconnect is lying. RMED, week to date. I got in on the 21st. I got out on, yeah, I got in on the 21st at 50 cents, out at 49 on the Friday. So I did take a penny loss on this, but I mean, no harm, no foul on losing there. VBE, again, it's had a really good rise from March. I got in again on Thursday. I think it was around the 240 mark. Got out on the Friday around the 246 mark. So very small gain on this, but that was it. I will not. I probably will not use this tool again in the future. I'm going to take RMED and VBIV off my chart now. We are about a half hour in here, guys. So what I'm going to do is I am going to, let's go here. Let's do this. I'm going to run a 60-second ad, guys. I will be right back. Just going to grab some water. I'll be back, and then I'm going to take a look at some of those stocks that were thrown out in chat. And then if you guys have anything else you want me to take a look at, I'm happy to do that. If we've got nothing there, I'm going to go through a few press releases, see if there's any news that we need to know for over the weekend. If there's nothing, then I'll probably just play some games for the last little bit here, or log off, really, depending on what we're looking at. So, yeah, I'll be right back. All right. So AR, FOSL, and HTZ. AR, FOSL, HTZ. Okay. AR is Antero Resources Group. So this is in the energy sector, natural gas, pre-COVID, up around 259. So it's returned to levels above pre-COVID. Boris, are you still around? I'd love to hear what your thoughts are on this. Are you taking a short against this? Are you taking a long against this? What are you looking at? Okay. Okay, great. So, if you were just going to kind of throw it out there, do you think that this looks like a good long or a good short? Do you think it's going to go up or down? I already have my opinion, and I'm going to break down why I have the opinion that I have. But I'd love to hear. Do you think that AR is a play that looks like it's going to go up or down? Short. Okay. Okay, so looking at for those of you that aren't aware, I think most of you guys that are in this chat are aware. But guys, when we're talking about going long or short, long would be yeah, we think this is going to go up. Short is we're saying we suspect it's going to go down. I am with you on the short side. The energy industry right now is hurting in a big way, and yes, the oil wars seem to be easing, and we're opening back up, so usage is going to be there a little bit more. But the reality is. This is tied to the energy sector. January, if you'll see like this constant decline, January was a peak economy, and this thing declined into that peak economy. So normally, what you want to see on a stock like this is you want to see a you want to see it trend like this, but instead we're seeing it trend. I mean, how long has it been doing this? Year to date. So you see this massive decline into April. Now it is a natural gas based energy stock. So natural gas, for those of you that don't know, tends to increase into the spring. So that's what we're seeing here. Unfortunately, when you're over this level, when you are over this peak in January, so this is straight across here. So this decline and then return, this is typical of natural gas. This is typical of natural gas. But what we start to see happen into the fall is we start to see a decline again. Um, I don't know that I see enough movement on this board either way. I think if it declines, I would see it decline probably to around where this line is, this 260 line. So if that's enough movement for you, then great. If not, then I mean, it does have some potential to continue this line. I think it could potentially continue this line right up to the $4 mark, maybe, and then maybe it'll come down. So it might be something that's worth watching for sure. Um, Hertz, don't go near Hertz. They filed bankruptcy. Stay away from it. It may be a different animal coming out of bankruptcy, but they've filed Chapter 11. So Hertz is a no go. Fossil. I think this is an energy sector as well, right? Consumer discretionary. Fossil. Oh, this is retail. Okay, I'm gonna check the SEC on this. They're filing on earnings. This is not their earnings. This is their meeting. Hold on. I'm gonna go look at their last earnings. Here's their annual report. Kimmy, I will definitely take a look at Shop. I know Martina and I had fun breaking that one down. Um, I don't know that we came to the same conclusion on it though. I think I may have come to a different conclusion than Martini on this one. Watches, smartwatches, jewelry, handbags, small leather goods, belts, and sunglasses. Okay, so I don't care about any of this except smartwatches. Smartwatches is the only thing that piques my attention on it. Wearables is going to be serious, especially with Apple Glass or Apple, whatever they're calling them, the glasses with Apple are coming out. Smartwatches are more common. I know I've been wearing one. Almost everyone in my family has one now. I think wearables is a definite emerging Licensed brands: Armani, BMW, Chaps, Diesel, DKNY, Armani. So this is premium. We're moving into a good season on premium. Greed is taking over again, which means that this looks good. Um, their Chaps arrangement is coming to an end, and they are not going to renew. Everything else is good through 2023. Ah, okay, that makes sense. Yeah. So yeah, I'll definitely take a look at it. Private label, licensed eyewear, product design development. Okay, great. Now the thing is, you would look at these brands and go, "Wow, that looks like a great lineup." They're paying a pretty penny to license those brands, though. So, I'd love to see what their sales tables look like. I really hate how this is laid out. I just want the tables. Here we go. Net sales are down year over year. Profit is down. Operating income is at a loss. Net income is at a loss. They've lost money for the past 3 years, so that's of note. I mean, this is during one of the largest economic booms we've ever seen, and they're losing money. Um, I'm seeing fossil to the short. I think it continues to decline. Um, 250, $2, but definitely short side. This would be a short play as well, I think, Boris. Um, these aren't bad. The only thing that I would recommend is so I see three stocks in three very different industries, Boris, and I think you might find more success if you just dialed in on a single industry. So if you like energy, look at a bunch of different energy stocks. If you like retail, look at a bunch of different resale stocks. If you like Hertz, which is like travel tourism, take a look at travel and tourism. Really dial in and try to understand a single industry, especially if you're dealing with a small amount of capital to get started and you're trading in equity instead of options. I highly recommend that you dial in on a single industry and focus on learning it and understanding how that industry plays. So you can tell that I've done some energy trading in the past because I know the seasonals on natural gas, right? Retail, professionally, I'm a digital marketing consultant. I work in the retail industry. I know how industry plays out. I know I was expecting to see with all those big names that they were in debt. Their debt load is really high. I'm not a huge fan of fossil, so for a short side pick, I do like it on that. But know the industry you're going to trade in as you grow your portfolio. So, like I showed on mine, I do have largely a bio position, but there is some players outside of bio. I'm very comfortable with bio right now. So for me to go out and learn another industry, I think that now is a good time for me to do that if I wanted to, which is why I took GameStop. MFA was a play I had from pre-COVID. Just re-entering my position on that as my drip portfolio. So, but GameStop is a new industry. I haven't played the gaming or the retail sector, so this is new for me, but I did a lot of due diligence before I took that play. Okay, Shopify up next. Shopify, Shopify, Shopify. Okay, so Shopify right now is Canadian stock market, and I'm not overestimating it when I say that, guys. Shopify really is the Canadian market right now. It has a meteoric growth from mid March until now. It went from $300 to $825, so more than doubled. Here are my thoughts on Shopify moving ahead, however. What I see is Shopify. My thoughts on it are: I see Shopify at this level being reasonable. Um, I see. I think it needs to let a layer out in the short term. So channel somewhere between mm, somewhere between this plateau and this plateau. I think it needs to deflate somewhere down to this level. And then I do think in the long run, Shopify could be a $900,000 stock. I do. So it depends on the play that you're looking to take on this. If you're looking at the quarter, I think it's due to deflate. Um, Probably the higher side of this, at 725, 735. I think it's probably going to deflate to that level. And then if you're looking at it on a year out, I think it will come back to around the level it's at right now, that 825. If you're playing it 5, 10 years out, it's going to be up around that 900,000. Yeah. If you're waiting to get in, I might wait a little longer because I see it declining before it goes up again. So that's my thought on Shopify. I really like it though. I really like the model. I think it has the potential not to be an Amazon killer, maybe, but definitely it's going to wound Amazon in a big way. Um, yeah, that is my thought on that. Any other stocks you guys want me to take a look at while we are here breaking things down? Not at all, Kimmy. Happy to do it. China says Hong Kong security laws won't hurt foreign investors, so this reassurance that the what about Facebook with Facebook shops out? So Facebook has had a long-standing agreement with Shopify. I don't think that this is huge for Facebook, to be honest. Most stores don't want to drive traffic to Facebook. They want to have Facebook drive traffic to their stores. Um, One of the policies, especially with e-commerce, is don't sell on rented land. You want to own your website, your newsletter, your mailing, your customers. You don't want to own them on a Facebook platform. So that it sounds like big news, but in reality, most people don't want to do that on Facebook. They have Facebook business page sets up, but I don't think it's a good play for Facebook. I don't. Um, and I think anybody that's in e-commerce would probably tell you something similar. Um, Online bias in tech giants. Huawei takes another hit for being removed from 5G, so that's not only the US, that's the UK. Lawsuits against 3M. Space is going to go down again. Chinese institutions on the blacklist. Yeah, that's exactly it. You want to drive traffic to your store from Facebook. You don't want to drive people to Facebook to use your store. Zuckerberg doesn't understand that's the appeal to the e-commerce industry. So that's his fault. Good for Shopify though. So two more chapter 11s. Okay. So Trump is considering reviewing anti-conservative bias on social media by establishing a new panel. I think this needs to happen. For a long time, there's been accusations of there being left-leaning support that is silencing um, more conservative opinions. We did see Michael Burry, who's an outspoken. I don't know that he's a conservative, but his sentiment against the economic lockdown was quite clear, and as a result, he had his check mark taken away from him on Twitter. There are lots of examples of conservative lockdowns on YouTube, Twitter, Facebook, Instagram. So I think that this is not just hype news. This is a reality that there is a left lean inside the bias of this company's ownership, and I think that will need to be addressed. Freedom of speech, right? Freedom of speech. You got to operate on that if you're a U.S. company. And I know a lot of people are saying, well, it's their own company; they can decide who can and cannot use their platforms. I mean, generally, I would agree that's true. However, I think in this case of social media laws being outdated, and you've got people that want both sides equally represented, if it is a social media platform, having the same rights to speak their opinion, I think that's reasonable. Um, it's not saying they have to create conservative content, but it is saying that they need to allow for conservative content. I think would be the thing. 3M settles two lawsuits that it filed in Florida, connected with its efforts to combat fraud, price gouging. Okay, so this is actually good for 3M. So this is what's up, Panda. This is good. This is people that are claiming to use these masks, and didn't have the license or the patent to use them. Okay, so that's good news for 3M. I'm actually going to add 3M to my list for next week. Let's get rid of this, get rid of this, get rid of this, get rid of this, get rid of this. I want to keep ONSI up there. I want to keep AZN on there. I can get rid of AKTX. Okay, so yeah, let's put 3M on here because I'd love to watch 3M and what it does next week. How did it finish the? Open at 141, closed at 146, so not bad. I think that news on the lawsuits is going to be good for it though. Um, Space. If this drops to 10, I'll probably take a position again. I'm fairly certain I'll take a position again. The U.S. Commerce Department will add 33 Chinese firms and governmental institutions to an economic blacklist for helping Beijing spy on its minority Uyghur population. So this is the Muslim population in northern China. Um, so no more semiconductors going to Huawei. Huawei is under some serious fire from Canada, UK, and now, or Canada, US, and now the UK. Not familiar with any of those companies, so okay. I mean, could play into the trade war, but I don't see any stocks that I readily see named, so that's fine. Flights are at all time lows. They're projecting it will take several years for it to return to pre-pandemic levels. That's pending we don't have another outbreak. I would stay away from airlines, guys. I'm not a fan of airlines. I think there's going to be a lot more damage done to them. A lot more damage. Cattle looks like it's a company that Tesla's going to use for their batteries on the M3s in China. I don't know that there's a trade on that other than Tesla sees positive gains because the Chinese government, I think, is more likely to approve it. I think China is more likely to approve Tesla's uh, growth if it's using Chinese companies and Chinese parts. Yikes! Plane crash. Hmm. Okay, so almost a 20-year-old plane. It's been used in Pakistan since 2014 without issue. Interesting. Hmm. June 4th on casinos, guys. So if you're looking at getting into a casino play, FLL. Maybe I'll add FLL here. How's FLL doing this past week? Good gains, actually. I think I like it. Okay. What's Red Rock? 1378.46. Nvidia. Yeah, how did Nvidia do this week? Nvidia? Because they did have that superconductor or the super chip for the AI. So I was expecting them to do well on earnings. I was expecting them to do well on that. I think that's a Monday play that we discussed that. Um, open 350, close 360. $10 a share, not bad. I mean, if you had 350 calls at open was 315. If you had 350 calls last Friday, where were you most of the week? I was here. I was around. Uh, I do streaming in the morning from 4:30 to 7. So I do that, and then I'm in the stockies call first thing in the morning. And then I go trade for a few hours. I do my work as a digital marketing consultant for a few hours. And then usually I try to hop in with Rita by the time she starts her stream up. So I'm definitely around. I think it was on Rita's stream most nights this week. Just breaking stuff down. I was on the calls every day except one, I think, in Stocky's chat. So I don't know if you guys know Stock Guy or not, but definitely worth checking out over on Twitch. Twitch.com/. Yeah, I start at 4:30 in the morning EST and go till 7. So I always run a rerun immediately afterwards because that may be too early for some people, and I want people to be able to get the rerun at the very least. So I start 4:30 a.m. Eastern Standard Time. I run till 7 live, and then I immediately drop the rerun of that morning. So if you're getting the reruns, you're still getting all the due diligence that I did that day. That's not a rerun from another day. That's a rerun for the morning, so you can still go through that and learn. I just may not always be in the chat watching what's going on. So either you got to get up a little earlier or check it out. Oh, PST. Yeah, you can't get up earlier. No, that's nuts. So yeah, 7 is still pretty early for you. So yeah, um, yeah, that's super early. So normally you can catch me on Stocky's call, and then you can catch me probably hanging out with Rita towards the end of the day. So, uh, yeah. Yep. But I'm glad to hear NVIDIA did well for you. What are you looking at this week coming up, cycling? Just a chill week. That's pretty cool. I love that. I love that. There are those nice weeks where it's just like, my portfolio's Gucci. I'm good. I'll just leave it. I'm pretty much locked in, actually. I think this week might be a chill week for me as well. I may take a look at this FLL, but otherwise, I think I'm pretty much locked in until the end of the week. Friday, I may make a shift on some stuff, but yeah, I think there's some good gains to be had on my cancer stuff through the week. Uh, exactly. Absolutely right. You don't need to play all the time, especially if you have a long portfolio. There's no need for you to play every single week by any stretch of the imagination. Um, I know for me, so let's see here. MERX is end of the week, but this was a 2 week play for me. This one here is going to be a 6 month play. This one here is a lifelong play. That's going to be a drip portfolio. This one here is into January of next year. This one I'm not taking. I can get rid of that. This one is next week. This one is next week. This one is who knows. This one is just a watch. This one is just a watch. This one is next week. This is next week. This is just a watch. This one will be potentially a 6 month play. So, is California out of lockdown yet? Are you guys still locked down? Not sure California is one of the open states yet. Avidity Biosciences, $100 million IPO. Jola, California-based biotech, still locked down. Okay, that's what I thought. Revenue 2.3 million. Net loss 24.7. Why is this company IPO? Gross. So here's what's going to happen with Biostock. They're going to IPO. They will come in at a high price point of $6-7. They immediately will do an equity offering as soon as they can possibly do a share offering. They will do one. It will tank the stock down to a sub-dollar stock. They will get delisted until a point where their rare disease drug pays off. That's how this is going to go. Generation Bio, net loss 71%, going IPO. No, thank you. No, thank you. All right, guys. NIH study shows remdesivir improves time to COVID-19 recovery. Mortality rate of 7% for those on remdesivir. So they're saying there's still room for to improve. The problem with remdesivir is that you can't. There's so few people you can give it to. Can't give it to old people. Can't give it to people with liver problems. Can't give it to the pregnant. Can't give it to breastfeeding. Can't give it to children. Can't give it to. There's too many. Can't give it to on remdesivir. Um, yeah. Anyways, guys, that's it for me. Hopefully, this was helpful breaking down the week. I'll be back. I take Sundays off, hang out with the family, relax, have a day of rest. But I will be back first thing in the morning, 4:30 a.m. Eastern Standard Time. Until then, take it easy, guys. Thank you so much for watching, and I will see you then.